Welcome to TheoTrade. This is Don Kaufman. It's May 7th, 2025. Seconds to go to the cash close here on this Wednesday afternoon. It's a Fed day. And what did the Fed do? Well, they came, they saw, they did absolutely nothing. And that's exactly what's going on inside of this marketplace. The S&Ps right now are up some 26 handles, but for a Fed day, there's like no volume out there. Trade is broken, disconnected, choppy, skittish, if you will. Liquidity, that is bid offer spreads. Well, check this out. As I said, we're coming into the cash close over here. If I cruise over to active trader, I'm going to recenter right now. Liquidity, again, is extraordinarily thin for a cash close. I mean, just wild stuff that you prototypically just would not see in the midst of a Fed announcement. But let me kind of break down a little bit of that Fed announcement. As I said, they came, they saw, they did absolutely nothing. The bottom line of the entire Fed announcement, in my opinion, is, and there are the closing bells. Bottom line of the Fed announcement really came down to the fact that, well, there's not really a means to an end yet. They have no feel of what this is going to look like until they get some clarity on tariffs. And until that point, the Fed actually believes we're in a decent position in terms of monetary policy. I mean, it's really what it came down to. It's wait and see. Okay, it's a wait and see approach. Nothing other than that was really stated. You know, I even actually tuned into some of the Q&A. I'm like, I'm so curious. What could they possibly say in the midst of such uncertainty? And the bottom line is they said just that. There's uncertainty. We will do nothing until we see something in the data. And they were questioned specifically about, you know, the jobs number was actually pretty good. Okay, don't have to worry about there. Sentiment indicators were not good. They said sentiment doesn't, not a great indicator of, you know, the economy. And until they see, you know, broader weakness in definitive data, they're not going to do anything. And the, you know, the Fed itself, okay, obviously moves the Fed fund futures, which we're going to look at here obviously momentarily. And when I'm starting talking about Fed fund futures, well, this is actually the Fed Watch tool. So clearly the meeting today is over and done with. We're actually looking right now out to the June meeting. The June meeting has about a 76% chance. And again, that's not just me saying it, like literally, take a look. It's about a 76% chance of doing what in the June meeting? And the survey says no cut. What's interesting about that is just about a week ago, there was almost a 70% chance of a cut. Now there's a 70% chance, almost 76%, 77%. Check this out. Actually, we can refresh. Now it's 77% chance of again, no cut, go all the way out to the July timeframe. July is the first time that they're, you know, even considering, if you will, somewhat of an interest rate cut. But look, as I said, they didn't really say anything other than the fact that it's data dependent and they don't have any data to actually go on, okay? Because the trades and the tariff are, you know, so ambiguous at this point in time. So here we wait, you know, once again. You know, looking around the market, though, there's nothing that's very definitive in here from the advanced decline line. So the advanced decline line is positive. But even though the advanced decline line is positive, there's a lot of drag in the market today, specifically because of Google. Google reacted to an announcement out of Apple. Apple thinking of adding AI to their search, okay, which is going to impact, obviously, Google's business. Some sell-side activity in here, but frankly speaking, I'm rather surprised that Google being down some 7% did not categorically have a more significant, okay, impact upon the entire marketplace. That the marketplace just ultimately took this in stride. At the exact same time, though, you can counter and say, well, Nvidia actually picked up. And again, this is coming towards the close, obviously news related. This has everything to do, Nvidia got a bid back under it, has to actually do ultimately with chips, okay, and holding back certain chips holding back certain chips and chip restrictions throughout, of course, the world. So Nvidia had a pretty good bid under it. Broadcom actually followed suit in this particular front. But again, you look back at the broader S&Ps, okay, for today's trade. As I said, it kind of felt broken, disconnected, skittish, if you will, and it is a little bit alarming to see that we did. Like now we're kind of settled out after the close here. About 1.3 million contracts traded today, which is just, that's a mess. It really is. For like a Fed day, the volume is, very often 50 to 70% greater during a Fed day. Can you even tell that today was a Fed day? Of course not. It looks like any other day where absolutely nothing effectively occurred. And I don't like to see that because, again, it's putting all of the pressure, all of the, the volatility right now, okay, is all about, okay, tariffs. And that just does not exactly make me feel warm and fuzzy in positioning to the near future over here. It furthers the idea that the S&Ps, and they could be moving 200-300 points off of any given announcement in a matter of seconds. Again, there's lack of liquidity. Okay, not even the Fed could obviously move markets. It leaves us extraordinarily vulnerable to significant moves. In fact, one of the things I'm going to be doing, in coming days is I'm trading specifically for that. I'm taking, out of the money shots whereby significant moves in markets in short periods of time is how we'll see degrees of profitability in here. Moreover, if you take a look at volatility, say what you want about the marketplace rallying back, and that's fine. Okay, the marketplace, had a bid back under it. That bid is kind of stalled, but we're still in, again, a fairly heavy volatility backwardation, and that continues to imply like the risks won't abate. It's no different, I should say, than Jerome Powell saying we don't have an idea of what we're looking at until, well, we have an idea of what the tariff situation is going to be. Volatility is just, right in line with that. The backwardation, okay, may not subside. Even if we were to continue to rally, the backwardation in volatility may not subside until we have some degree of clarity. And that's the entire marketplace, okay, and the economic outlook, okay. There's just, it's blinders on right now, simply because how do you actually price things, okay, without having any idea where price is going to be? And that's literally what we're talking about. Like, how do you price, price action even inside of Apple, okay, with the tariffs hanging over their head? We have no idea how to even price, their product out there. And that's where we basically sit. And that's why volatility remains kind of in backwardation. And ironically, volatility even in Apple itself is in a pretty heavy backwardation, even after, okay, its earnings announcement. So a final look around at markets today. Is the Fed offering really anything? And the answer was no, not really. Other than, okay, they'll act when it's time, okay? I actually take that comment, and I'm a little surprised by even me saying this, but the comment was a little more hawkish than dovish. And what that basically implies is they're not backing down that interest rate until they absolutely have to. They're not bowing to any political pressure as well. All right, last thing I cover, and I do this each and every Wednesday night, and of course on the weekend updates, taking a look at the SPX. So this week, what do you got? You have $130 expected move for the entire week, right? So $130, okay, is our expected move for the week. That is $130 higher, $130 lower. We got close to hitting the lower edge of the expected move today, but it did not happen. Okay, so we're about halfway home, okay, to the lower edge of the expected move. Markets are marginally, and I would say marginally lower on the week. If you take a look at the QQQ, bring up auto expected moves in the Qs, okay, the Qs did actually tag the lower edge of their expected move today, but it's the SPX that's really kind of near and dear, people, to my heart, because the SPX is really going to drive that order flow. And in the SPX, given the fact that this is Wednesday, look, you got nothing but Thursday, Friday left for you, and yet we're still seeing almost an $80 expected move. So once again, I reiterate, okay, the volatility remains, and it might be this way for a few weeks. The markets feel like they're in this pause, if you will, seeking information, which clearly they did not get, okay, from the FOMC committee. I mean, Jerome Powell, what did he say in his conference? As I said to you, absolutely nothing. So without a lack of clarity, the assumption moving forward, okay, markets are going to continue to be rather skittish. We're going to have high expected moves, okay? Big impactful moves will come as the marketplace disseminates information. From my perspective, try not to handicap what that information is going to be. Meaning that don't try to handicap like, oh, I think China's going to do this, or oh, I think Vietnam is going to do this with regards to tariffs. Take, okay, and substantiate shots in the marketplace. An example could be if you think this tariff situation is not going to be resolved anytime soon, okay, a wild and woolly bearish position in something like Apple all the way out, 44 or 72 days out, buying out of the money spreads would be well warranted. Okay, if you think the tariff situation is going to be resolved relatively soon, maybe a position like a Nike, but just a wild bullish position as Nike actually recovers, okay, because Chinese tariffs actually resolve themselves. Place enough shots, and I'm telling you, we're going to come out wildly profitable here. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.